So, about a week ago, I wrote an article called Three Tips for Trading in a Choppy Market. As any investor and trader would know right now, there's a lot of volatility in the stock market due to a number of things. The aggression in Ukraine. Um, there's still, COVID stuff going on. And in general, the market's super choppy. And if you want to see just how choppy the market is, you can kind of take a peek at the year-to-date charts. You can see here is the S&P 500, just tons of chop. If you were to go back to, like a 3-5 year view, you can see that generally, while there's a lot of, chop mixed in through the 3 years, for a period of time, it kind of just went up. And right now we're here, which is getting quite choppy. You can see it in the Dow year to date, lots of chop here, and in the NASDAQ, plenty of chop. So basically, we're in a choppy market, which makes it much more difficult to trade. You'll see less consistency from people who don't have good trading plans, who don't have good strategies, and maybe don't even have good discipline in trading. When it comes to option trading, all those things are super important. So if you don't have those, you're going to be in a tough spot. I mean, you'll even see our admins, while they do call out some really good plays, and I mean, even I think past 3 weeks, Sean has had 3 straight weeks with at least one, if not more, 100% alerts. I think DAP last week had 1,000% alert, and Max's credit spread strategy, Prince Boot has at least a few trades a week that are 20-30% plus in gains. So I mean, although we're getting really good trades, they're less frequent, which is actually the first tip for trading in a choppy market. You'll see here. So tip number 1: trade less often. This is big because when the market is choppy, you don't know exactly which direction it's going to go. You could get yourself heavily into puts, and then all of a sudden the market starts to go up for one reason or another. Get yourself into calls. All of a sudden the market goes down. The key here is trade less often. You'll see here, this is our admin Sean's trades. This is generally his October trading chart. Tons of trades. This was his February trading chart, minus a couple days, far fewer. Still plenty of profits. Only 2 really negative trades in here. So good percentage in terms of gains, but you'll see that he was trading a lot less often. Tip number 2, take profit early and have a strong exit strategy. I think the big part here is that when the market's choppy, if you see an unexpected dip or an unexpected, rise in stock price due to any piece of news, it's going to happen quick, generally. And so by taking your profit early and securing those gains, you're making sure that your profits are locked in. The best way to have account growth, in our opinion, is to have consistent, steady gains. Even if it's only 10%, 20% a trade, 5% a trade, doesn't matter, because any gain is going to help grow your account. Whereas if you stay in a trade too long and you're up 10%, you're like, no, I think I can get this up to 50%. And all of a sudden the piece of news comes out, changes the direction of the market really quickly. You may all of a sudden be down 20%, and there's a loss instead of what you could have locked in as a profit. So have a strong exit strategy in the sense that all right, I'm going to lock in my gains at a certain point, or I'm going to set a stop loss. As soon as I hit 10% gains, stop loss is going to be tight, only 1%. No matter what, I'm locking in, a 9% gain if it dips back down a bit. And you're really protecting yourself from huge swings in the market by having a strategy like that. Which brings us to our last point. Stick to your trading plan. Everyone should have a trading plan. If you don't, you're really setting yourself up for a lot of risk, because without a trading plan, you have no direction. One day you're like, oh, I'm going to get heavily into, covered calls. And then tomorrow I'm going to do spreads. And tomorrow I'm going to scalp. And today I'm going to take, a really risky naked option and leverage too much of my account and potentially blow it. Not having a trading plan is what's going to kind of churn you up and kick you out of options trading real quick. And when it comes to our members, the members who have a good trading plan and then stick to it are the ones who stick with us the longest because they're making profits. And they're the ones where if you see account growth on our Instagram, or if you're in the group and you see it in testimonials, you'll see that the people that have good trading plans typically show, month over month account growth. And those are the people who start out with, let's say, $1,000 in their account, and a few months later, have 5, 10, 15 grand in that same account because they made a plan, they stuck to it, and no matter what happened, they trusted in the plan that they developed. Generally, those people are creating their plans with an admin's help. Booty does coaching sessions. Sean and him did the mentorship, which they're continuing to do. And oftentimes people will come in and they'll just make a plan with an admin without having to pay any extra for coaching or mentorship. They go into a channel and start talking with an admin and get some guidance there. I would say until the market settles, though, if you are sticking to your trading plan, really scale down your positions. It's really good advice because if you're normally leveraging, let's say, 3 to 5% of your account in a market that is more predictable and has some direction, you may want to leverage only 1 to 2% of your account now, because if a shift happens and you don't get out of your trade quickly enough, you're not going to blow up your account. And really what I think most traders who want to be in it for the long run, what they're doing now is taking smaller trades, less risky trades, and keeping tight stop losses to lock in gains as soon as they hit a predetermined percentage. So that way they can see a little account growth while they wait for some direction. Because once we get out of the chop and have some direction in the market, that's when you can kind of employ your old trading strategy with maybe higher leverage trades, higher percentage leverage trades, and kind of make gains based off of that direction. If you're big on calls and the market's choppy, you're going to be in a lot of high risk trades because the market may start dipping really fast. Whereas if you're in a time like we saw in the longer term view of S&P 500 here, where from about here to here, the market just went straight up over time. If you're into calls, then it's likely you're going to make a lot of gains, and a lot of people did. Now, if you were into puts and you got in here when the market crashed, you made a lot of money. But when it's choppy and there's not a lot of direction, it's really, really recommended that you have smaller positions so that you don't leverage so much of your money, so that you have money when there is a long period of growth or a longer period of decline, that you can really make safer trades at those times because you have the money to do so. We see so many people blow up their accounts on highly risky trades when they over leverage their accounts, and it is one of the worst things because a lot of people, when that happens to them, will give up on options trading altogether, will give up on investing altogether, when we know that people that have good risk management, good trading plans, good strategies can make a lot of money over a period of time, more than they would if they just put their money into a passive account. When you see things like we saw on Sean's trading chart in October, his account as a whole went up significantly. At least quick math is at least 20-30%, if not more, in a single month. At most, in a passive account, you're probably aiming for around 10% gains over the course of a year. If you have a consistent strategy, you can exceed that tremendously, but you have to be smart about it. You have to follow our admin's tips, and you have to trade based on what the market is giving you, not trade based on how you want the market to be. So those are the 3 tips for trading in a choppy market. If you'd like, you can go and read the article on our website. I'll link it in this video. As always, be smart with your trading. Don't over leverage, be disciplined. And if you're not in our group already, I really recommend that you come join Max Options Trading. Even if you don't want to do a lot of trading right now, per se, you could learn quite a bit that will then help you once this market settles into a certain direction. Now's a great time for education and learning, so that once the market picks a direction and it's a little bit less risky to get into trades, you'll have all the tools necessary to be successful and make a lot of money and profit off of that market. So come on over, 7-day free trial if you're a new member. If you're an old member and you want to come back, I'll give you an insider tip. Make a new email, make a fresh account, then you'll get your free trial a second time. So come on over, learn some stuff, and let's make a fuck ton of money.